Let's talk about Tesla, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the hoodie to prove it. And today we're going to be speaking about everybody's favorite EV, aside from workhorse, Tesla. So I haven't really spoken about Tesla on the channel very much as of late, despite the fact that they are now my second biggest holding. And only this week did I go ahead and add a little bit more to my position in Tesla. So I want to speak a little bit about why. I want to speak about the stock split. And I want to speak about the battery day and a few other little bits and pieces in between. But a lot of people are asking me, should you be buying Tesla before or after the stock split? So that is what we're going to spend a decent bit of time speaking about in today's video. I would like to preface it by saying I am a long-term investor, so ultimately I don't actually think it's the most important thing in the world, but it is still worth discussing. So guys, right before we get into the video, can I please ask you to hit that juicy like button? It would mean an awful lot to me. It really helps me and the channel out. We are grinding heavily on here. I am trying to get some more special guests on the channel for interviews like the one we did with the CFO of Workhorse and Jeremy from Financial Education. I have a few really exciting guests that I'm just trying to get on. If you're new around here, please hit that juicy red subscribe button, people. Join the family. The growth has been insane lately. I appreciate every single one of you so much. You are making this all so worthwhile. And please do drop me a comment down below. Let me know where you stand with Tesla. You know, if you're invested already or if you're waiting to get in, you know, after the stock split, let me know where you stand. Anyway, guys, with that being said, let's get straight into the video. Okay, so let's start things off just by having a look at Tesla and how its price has moved over the last couple of weeks. So, I mean, if we go to the monthly chart, we can see that on the 11th of August, we were trading at $1,374 a share. And since then, we have gone up in value over 36% in the span of just over a week, people. Now, prior to this, we had hit some all-time highs. We had hit $1,700 or so. And from there, we had come back down. We had come down considerably, about 15 to 20% from the exact highs. But in typical Tesla fashion, after that slight pullback, they proceeded to shoot up in value. So as of this moment in time, Tesla has hit $1,900 at its peaks, okay? The PE ratio is at 966. Massive PE ratio, but Tesla always has had one. I speak about this in many videos, but when it comes to growth stocks, especially a stock like Tesla, you cannot value them in a traditional way. So it's important to understand that from the very beginning, if a company has this high of a PE, okay, it is going to have to be a very long-term hold because you cannot sustain this PE ratio forever. People are assuming that in a couple of years, in 2, 3, 4, 5 years time, Tesla is going to be in such a better position than it is right now, and that is why you pay such a premium for Tesla's price. In a traditional sense, again, this is a ridiculous valuation on Tesla, but Tesla is somewhat of an anomaly in the stock market. So the main thing that really caused this spike in value, okay, was the announcement of the stock split. And I've been getting a lot of people asking me, should you buy before or after the stock splits? Now let's just make it clear from the start, okay, that when a company does a stock split, it neither gains or loses value. If Tesla is $2,000 a share at the time of the split, you will get 5 shares worth $400. You don't make or lose money based off of a stock split whatsoever. But as we can see, people like the concept of a company that is as expensive as Tesla. Keep in mind that right now, this is close to $2,000 a share. Simply put, a lot of people cannot afford that. Whereas if it splits and it's somewhere in the range of $300 to $400 a share, a lot more people will be able to get involved. A lot more everyday investors will be able to get involved. There is a massive psychological element to this. I think it's important to remember, people, there's a lot of investors out there, okay, who maybe invest $50 to $100 a week. Say they wanted to get into Tesla and they had $50 to invest. Even if they had to get fractional shares, it would seem so incredibly insignificant that it could just put them off buying the share. Whereas if it's $300 a share and you have $100 to put in, you can get a third of a share. That does seem a lot more significant than getting 0.06 of a share. So the main reason this is happening is for psychological reasons and to try and entail more retail investors into buying this company that a lot of them want to get involved with. Simply put, they just can't afford it. Now, what traditionally happens with a stock over the coming weeks, maybe even the coming months, when a stock split happens? So seeing something like this is common. Seeing quite a significant surge in the stock price off of the back of the split announcement is common. Another very relevant one right now is Apple, okay? A company who just yesterday hit a $2 trillion market cap. They're a little bit below it now, but these guys announced a stock split and even they went up in value a very considerable amount. And the large majority of the time that a big company announces a split, this is going to happen. So before the split happens, in general, a lot of people want to get in because they think that a lot of retail investors are going to plow in as soon as they can afford to do so. Now, once a stock split happens, it has been seen in the past many times, that we go up in value for a short period of time, and over a short period of time, we start to come back down to a somewhat normal price. Now again, Tesla, as I said earlier on in the video, is essentially an anomaly. I don't really like comparing it to what has happened in the past with other companies. Tesla is just such a unique company. If I had to make a projection, I do genuinely think Tesla is going to keep trickling up before the split happens, and I do think it has potential the day of the split, maybe a few days after the split, to keep going up in value. But ultimately, I do think it's going to come back down. To what extent, I'm not too sure yet. But then once it does have that minor pullback and things are back to normal, I expect us to just go straight back to growing. So from a long-term point of view, do I think it makes sense to buy Tesla before or after the split? Honestly, guys, either. I bought more because I wanted a full share in Tesla before the split happens. And that's exactly what I have now. I have one share, so that's obviously worth $1,878. That means I will be eligible for the stock split, which will mean, I won't lose or gain any value. If you currently have fractional shares in Tesla, and you're asking yourself, should I get up to a full share or should I just buy in once the split happens? I honestly don't think it's going to make the biggest difference in the world as long as you are ready to buy very quickly when the split happens. But again, with Tesla, anything could happen. I think a lot of people think that Tesla is a relatively highly manipulated stock right now in regards to options trading. And there's no doubt in my mind that there's going to be some significant option calls made on Tesla coming up to this, or even potentially the day of the split. I'm expecting some big movements to happen. If I had to make a prediction, I think the stock price will go up. But ultimately, guys, from a long-term point of view, it won't matter too much. So did I buy more Tesla just because the split is happening? No, not by any means whatsoever. I want a bigger position in Tesla. I still want a bigger position in Tesla. There are way more catalysts than this stock split. So I want to speak about one of them right now, the up and coming battery day. So a lot of you are probably aware that Tesla's next battery day is set to be September 22nd, and this has already been pushed back. And in my opinion, I don't see why this would be pushed back unless it was to, announce something big. And we all know that if Tesla announces something big, the stock's price moves big. So one thing we do know about the battery day, okay, is that it's expected it will show how to scale cell production on a whole new level, which is extremely exciting, people. The reason I went through this valuation earlier on, okay, the 966 PE ratio, is because, there's so much growth factored in. If you're an investor now, you need things like this to happen. We absolutely need to see growth happen. If we didn't expect absolutely groundbreaking, massive things to come from Tesla, there is no way we could ever justify buying at these valuations. It would make no sense. So Tesla is constantly innovating to create better batteries as quickly as possible. We know this. They have the best batteries. They have the best ranges. During the battery day, Tesla will share its progress and quite possibly next level breakthroughs. And it's the fact, guys, to me, that this was pushed back, that makes me feel like something big is going to happen on this particular battery day. Now again, that is speculation, but that is how I feel right now. I also believe, guys, that the last quarter, okay, was relatively underwhelming. Now it was very expected, but it was underwhelming. So I also think that Q3 is going to be exciting, guys. And I wouldn't be surprised if Tesla really pulls it out of the bag in this next quarter, if not most certainly by Q4, which again will all help in bringing that valuation down ultimately, is what I believe at least. If we look at the total production, it's the lowest it has been in the last year, okay? The quarter over quarter was down 20%, the year over year was down 5%. Now, total deliveries were up 3% quarter over quarter, but were ultimately down 5% year over year. All in all, it's been okay. But to see this level of growth at just okay makes me really optimistic about what could happen in Q3 and Q4 of this year. And again, to me, the name of the game really is seeing Tesla pull some magic out of the bag. Until we start to see this PE ratio make a little bit more sense, it's going to be a bumpy road. It's going to carry the same amount of volatility, and that's probably going to be for years still to come. But guys, don't underestimate the power and the significance of this battery day. Keep your eyes peeled for any news that will come out leading up to this battery day, and especially just after the battery day. It is going to make some big moves happen. Now, the other thing I want to touch on briefly is going to be S&P 500 inclusion, because a lot of people have been asking, why hasn't this happened yet? And guys, it's not as simple as, posting the annual profit and at the click of a fingers you're in. In general, it can take anywhere from 4 to 6 weeks to get S&P 500 inclusion, if you get inclusion whatsoever once you do become eligible. So this still may not happen for another couple of weeks at this rate. It's hard to know, and it may not happen at all, but I do believe that it will. And if Tesla was now in the S&P 500, it would be very close to being the 10th biggest company in there. I mean, that just shows how massive Tesla is right now. Tesla would be the largest company in dollar terms ever added to the index, which managers of $11 trillion of investments either track religiously or use as a benchmark. At the current prices of Tesla and other stocks, managers of passive funds will have to sell about 35 billion to 40 billion of shares in the rest of the index's companies to make a hole big enough to fit purchases of Tesla shares. So essentially, guys, if it does see S&P 500 inclusion, it is essentially going to see a massive cash infusion off the back of that. So guys, I see no reason why Tesla should not be included in the S&P 500. Obviously, it's not a guarantee just yet, but it is another short-term catalyst for this stock's growth. Now again, let me bring you back to the valuation, because that could ultimately make this PE ratio even worse. This more than likely will happen before we see any updated earnings, any updated revenue, etc. And ultimately the PE ratio is going to be even worse. I mean, it will be very realistic to expect this PE ratio to break 1,000 at this rate, which will be absolutely insane. And also the fact that it is such a high PE ratio could cause some concerns in regards to getting S&P 500 inclusion, but ultimately I don't believe it will. It says here, companies who meet the eligibility requirements are not automatically added to the index, said an S&P Dow Jones Indices spokesman in an email statement. They join a pool of other eligible candidates and are considered for inclusion when an opportunity presents itself, at which point the index committee takes several factors into account, such as a sector balance and size representation. And at the current rate, when it gets included in the S&P 500, if it is around this market cap and this price point, it's going to account for more than 1% of the index altogether. Me though, personally, I do expect it to get included. I think it would be quite an outrage if it didn't. And funnily enough, if it didn't get included, I think that there would be so much free press involved in that. We all know that Tesla loves free press. I think Elon Musk would be absolutely livid. He would be all over the internet, and that could genuinely do more for Tesla than S&P 500 inclusion. And ultimately, guys, I think it's inevitable that at some stage Tesla has to get S&P 500 inclusion. So if it doesn't happen for one reason or another over the next 2-3 weeks, it essentially has to happen at some stage. Now let's speak about what analysts have been saying recently, okay? Tesla stock shoots above $1,800 for the first time after a Wedbush analyst boosts target to 4th highest on the street. And Wedbush, let me tell you guys, were not Tesla bulls. The average target still stands at $1,235 a share, but we have seen it, guys. We've seen so many analysts as of late raising price targets. Many of them above $1,900, a few of them above $2,000. And now the average target is $1,235, which even still, that's good. I know it doesn't look good, but analysts have never had as much confidence in Tesla as, you know, a lot of investors have. So seeing these things happen now, it's getting very exciting. Tesla stock has more than doubled up over the past 3 months, okay? Over the same time, Ives' price target has more than tripled, as its price target of May 17th was $600. This is what I'm speaking about, people. A lot more analysts are doing this as well. A lot of analysts are increasing their price targets. We can see this on Yahoo Finance as well, okay? The number of analysts, their average earnings estimates, okay? They're going up quarter over quarter, and they're going up massively year over year. Same goes with revenue estimates. I mean, next year, looking at $40.8 billion in revenue, that is impressive for Tesla. I mean, EPS as well, they're estimating to go up. Happy days. And we just look at some of the growth estimates here, and it gets pretty crazy. So, I mean, when you take all of those things into account, okay, the main things being the fact the stock split is happening and the psychological impacts that is going to have on investors. The up and coming Battery Day on September 22nd, which more than likely will contain some juicy updates. The potential S&P 500 inclusion and how that will lead to a massive initial cash infusion. And the fact that analysts are now really starting to get behind Tesla. All of those seem like massive catalysts to me, and all of those are reasons why I was willing to buy at a very high price. Right now my cost basis is about $1,700, which is really high. I mean, I've only been in the green for a couple of days, but it is because I believe in the long-term success of this company so heavily, people. And in today's video I just wanted to give you a little bit of an update on where I stand, because I've been getting a lot of questions on them. But that is it, people. That is where I currently stand on Tesla, and yes, I did buy a little bit more before the split happens. So guys, there we have it, my full up-to-date thoughts on Tesla as of right now. If you have gone ahead and watched until the end of the video, I appreciate you so much, and I really do hope I was able to give you some insight and value in this video. That is always the goal. And of course, if you've watched until the end, you already know this, but you, my friend, are a true legend, so thank you so much for being here. You are supporting me massively just by watching this till the end, so genuinely appreciate you from the bottom of my heart. And guys, tomorrow is Friday. You already know what that means. It's going to be a double upload. We're going to speak about Workhorse, baby. It's going to be an exciting video, so keep your eyes peeled for that one. But anyway, guys, that's all I have to say today. If you did enjoy, please hit that juicy like button, subscribe if you're new, and drop me a comment with your thoughts on Tesla. I really would appreciate it. I hope you all have an absolutely fantastic day. I will see you for tomorrow's videos. Peace.